right, what's going on, everybody? Thanks so much for joining us for today's Market Makers interview. Josh Weidman here with Hard Money Bankers. If you are looking for a private mortgage note for a real estate investment, you need some funding for your next deal, you can give me a call or reach out to me on Facebook or Instagram or any of those socials. Our guest today is Charlie Wu. Charlie is a real estate agent and investor in New Jersey. He is last year he was the #1 buyer's agent in the Princeton area. And Charlie, what did I miss here? Tell me a little bit. We started talking a little bit before the show, but tell me a little bit about yourself, your background, and what are you doing now? And tell me about your career.
Yeah, so I started off as an engineer, as a consultant. I worked for Ernst & Young, worked for a startup that got acquired by Google. I was working at Goldman, and then I have kids. My wife actually travels a lot, so I think she's going to make more money than me. So we decided that I'm going to be a person who stays at home.
Nice.
So I stayed home. I always liked houses. I made some investments, crowdfunding deals. I bought a few right here in the Princeton area. And as the kids grew up, go to school, I don't really want to go back to the corporate world anymore. So I became a realtor. And so I can also help my friends buy houses. It turned out and also, kind of flexible. We think you get a work-life balance. But no, it can be further from the truth. But I realized I'm actually doing pretty well. Last year, like I said, I did $35 million, and I'm the #1 buyer's agent in the greater Princeton area. And I started a team. Now we have 4 people total. That's how I got here and where I am.
That's awesome. So that's a pretty interesting background. Not too long ago, one of our guests is an agent. I'm in central Pennsylvania, right outside of Harrisburg, right? And one of our interviewees is an agent who, when she was done with medical school, she was in residency at Hershey, and she realized that she didn't want that kind of life. So she pivoted, and now she's one of the biggest agents in the area. So, I think it's interesting how people end up as realtors or in the real estate industry because, we come from all kinds of diverse backgrounds. I've got a degree in English. What the heck do you do with that?
Yep.
So it's anyway. So that's really cool. That's really cool. It's pretty interesting that and kind of neat that you guys decided that you were going to stay home with the kids. I love that. I love that idea. My wife and I she stayed home for 7 years, and that's a hard life being at home with kids all day.
Well, yeah, but at the same time, I love being with them. My older one is a senior now. We're gonna lose her after this year. So looking back, I don't really regret it. I think it's great that I get to. A lot of dads usually don't get to spend that much time with their kids.
That's right.
I'm grateful that.
That's awesome. It's awesome. It's really cool. Well, wonderful. So tell me a little bit. Let's start with your background in investing. I mean, what kind of investing do you do? Is it residential stuff, commercial? What's your interest in houses?
It's mostly residential. I worked at Goldman for a few years, Goldman Sachs, and I've personally I've been a stock trader for 20, 30 years. So I've always been interested in making my money work for me. And that's why I got into investing. And I think maybe 10 years ago, there's a lot of these crowdfunding deals online. You maybe have 5 minutes to say, I'm in. You don't have time to do your due diligence. If you do your diligence, it's no longer going to be there. So I probably invested in 30 of such deals. I mean, some are home runs, some are just, I lost 99% of my money.
Yeah.
But I mean, that's the cost of doing business. And as you get more familiar with these kind of things, then this is the area that want to do business in. This is the type of deal. Like, for example, a lot of what I invested in are multifamilies, right?
Mhm.
Those probably gave the highest rate of return. The single home flips, not so much, to be honest. You are probably just, I mean, you're a hard money loan lender.
Yeah,
It's the
it's a
same
hard
as that,
business.
right? Yep.
It's a really hard business, and I think people are naive or unrealistic about what the costs are and what the returns have to be to guarantee, a real return on the investment. I mean,
Yep.
it's tough to find a great deal out there,
Yep.
especially with construction costs up and lots of competition. It can be difficult.
Yeah, I think these past few years, especially so,
Yes.
because the costs have been going up like crazy. And I made a few offers last year myself,
Mhm.
and I lost all of them because I was being conservative,
Yep.
and because I never thought the market could go up more and more and more.
Well,
I didn't see that coming. So
and it's funny because I kind of I started investing in December of 2006. So I'm going into like the last height of the market,
right,
blind and naive and all that kind of stuff. And thankfully, I didn't start in the beginning of the year, and I got in like when things started shifting. And you know what, you live and learn, and lost a little bit of money on some deals. But what has kind of been in the back of my mind since then, like that's my context. So I'm waiting for the market to crash all the time, and it just keeps going up for 15 years. It's just, or my goodness, longer than that probably.
yeah.
And we're back here in 2024, and I don't know about you, but I don't necessarily see a crash coming anytime soon. What do you think?
No, no, not at all. Because I remember in 2022 when we saw the rate starting to go up,
Mm-hmm.
I actually bought a investment property myself, and in March. That's probably when the market was highest in many other areas. Not in
Yeah.
New Jersey. New Jersey kept going up actually. But looking back, I mean, I think it probably has appreciated 10, 20% by now. But I think what I tell my clients is that don't try to time the market. If you have money, dollar cost average, right? And if you don't have money, be careful. Look at the history of housing prices.
Mm-hmm.
Maybe you have a small dip, like in 2006, 2008, in the financial crisis. I studied in the entire state of New Jersey to see how much prices crashed. And I think when I got into the market, became an agent in 2015, there are only 3 areas that I've studied that has recovered and exceeded the previous peak. And those are either close to New York, have great school districts, or have a combination of the two. And that would be Jersey City, Princeton, and Millburn. These are the 3 markets that perform well.
Mm-hmm.
So, I mean, you can use it as your guide. Now, if you are, let's say your budget is $800,000, and the housing in your market is the median price is $800,000. You could buy high, and then you may have to wait a few years to break even. But at least you got home. If you bet wrong, you waited, and the market got away from you. Next year it's 900,000. Next year it's $1 million.
Yep.
How many people's income can keep up with that kind of gain?
Well,
Not many.
And exactly, and maybe the price stays the same, but interest rates are 7.5% instead of what are they, around 6.5 today?
Yeah.
6%, right? And I mean that makes a big impact on the bottom line and monthly cash flow, for people. I think that not just with not just with home buyers, right, but with investors. You really hit the nail on the head here. Is that you can't buy for the future. You can't. We don't know what the interest rates are going to be in a year. We don't know what home values are going to be in a year. And if you're buying in a good neighborhood, or at least a solid neighborhood that you understand, and you know what the cash flow is going to look like, if it makes sense today, it can be a great investment, right? And if it doesn't make sense, don't buy with an anticipation that you're going to find a 3% mortgage in a year or two. Like that's not going to work either.
Right. And if it does, and I mean, I think people have got used to the 6-7% interest now. You see,
Yeah.
Finally, people are starting to sell their homes.
Mm-hmm.
I think this year to date, the inventory, at least where I am, is probably up 10% compared to last year, but
Sure.
still down like 30%, 25-30% from the year before. So
Right.
it's still super competitive market. This year, like right off the bat, like after New Year's Day, you are
Mm-hmm.
seeing multiple offers. Homes that didn't sell last year sell. And
Right.
I remember I have a listing go up like in early February. We actually asked a few people if they want to buy, without having to go through a bidding war. They all declined. And then I put it on the market. We got 10 offers. Every single one of them is above asking.
Well, listen, it's the competition, right? It breeds interest. It's the fear of losing out.
Yep.
Yeah. I think that well, one thing that we have noticed in looking at, I think there was a shift in maybe August of last year, and that shift being not so much in the nice single family homes, right? More so in the average and below market, where if you have a house that's in good shape and it's in a decent area, or even not even a great area, but it's a nice house, it's going to sell, and it's going to sell quickly, and you're probably going to have multiple offers. But it's that fixer upper house that I think people are having a hard time swallowing these, a high payment, and they still have to fix everything.
Yep.
Yes. That's just is what it is. So we're about to enter. Well, I mean, I guess we're in the heart of the spring market, and in a month or two, we're going to be in the summer. Things may or may not slow down. I think we're still going to have an inventory crunch, and we're still going to have some issues there. But with this this recent settlement with the National Association of Realtors and a lot of agents, kind of, well, not even agents, but as of July, I guess, there's no longer buyers agents, commissions that'll be listed on the MLS. Do you think that we're going to have any kind of changes with respect to the sellers offering a commission to the buyers, or you think this is going to transition away from that?
I mean, it's not something very new. I mean, the sellers could always negotiate the commission offered.
Yeah.
In the past, the minimum is $1. Okay, so now it becomes $0. What's the difference?
Right.
Now, I'm not so sure why they are saying that you can't list it on the MLS, how much you're offering. All you are doing is having the listing agent, pick up the phone 100 times a day to tell you, this is what I'm offering.
Right.
I mean, it's semantics. I mean, they can probably just post it on another website, like offmls.com, and say, okay, for this listing, I'm offering 2%. And for all of my clients, nobody has pushed back and said, no, I'm not offering any money to a buyer's agent. Mm-hmm. I mean, what if you really want, you can just add 2% to your listing price and call it commission.
Well, and I think part of the argument there is that the State Department, or the idea here was that buyers agents were steering clients to the highest commissions, and they weren't showing them the other properties and all that stuff, which that may have happened from time to time, but there's no properties. What do you mean they're steering them? There's one house for sale in 10 miles, and where are you going to steer them to?
Yeah. And I mean, how, as a buyer, I mean, I do probably 60% buyers, 40% sellers, that kind. So, I mean, how are you going to answer your buyer that, hey, I'm not showing you this house? Because information is transparent. They see all the listings on Zillow. Right. So many times they bring this, listing to me and say, what do you think of this house? Mm-hmm. Are you going to tell them, hey, they're only offering 2% commission, so I'm not showing that? Right. You are going to lose this client.
Right.
Exactly. And that's not right.
they'll just go right down the street and show it to the next guy, and it's really silly. I think that ultimately this is going to have an impact, but I don't think it's going to be on the median home price and above. I think we're talking about lower end houses. I think it's going to require sellers agents to educate their buyers and to a much greater extent, so that they understand that, like, you are going to limit your exposure if you're not offering a commission here. And ultimately, it's that segment of the population that probably would have the biggest difficulty with paying a buyer's agent independently as well. So, I mean, it kind of has an opposite effect of what was probably proposed here.
Exactly. I think they are really hurting the people who need help the most. And
Right.
I think they are going to have to change the mortgage laws, and the rules, and like the VA. How are you going to be able to tell people who sacrifice for this country, now you don't even have a buyer's agent because you don't allow a commission?
That's right.
That's ridiculous.
It's foolish. It's totally foolish. And you're setting people up to try to represent themselves.
Yep.
In the purchase purchase of their life, with no experience or background. And
Right.
It's you do it a couple dozen times, and it's not so difficult. You do it one or two times, and it's pretty darn complicated. And making sure that you check all the boxes and get all the inspections that you need and all that kind of stuff, it can be a handful.
Yeah.
So tell me about the Princeton market. I think it's kind of a fascinating. I don't know. We had a client or an applicant that we didn't end up working with that had several investment properties there, that everything from land to a small multifamily, and there was a flip there and things like that. I thought it was so interesting to see the diversity of the types of housing, and also you've got a lot of high-end properties that are certainly selling, but some of them they look pretty crazy in comparison. You've got these huge mansions that are beautiful and look historic and things like that, and then you have modern designs, and you've got 1980s modern and all kinds of stuff kind of all thrown in there together. What is it that what are people looking for in your market, just in general?
Well, I think Princeton is diverse not only in its architecture, but also in its population. You have people, all kinds of colors, all kinds of nationalities, languages spoken, and they are all drawn to this town, not just for the Princeton University. Not everybody goes to the university
Right.
here, but the school district is actually also top-notch in the state of New Jersey. So many people come here for the schools. And there are also quite a bunch of good private schools around here. So you can go to public school, private school, university. There's bound to be something that fits you. And and the housing price is really, really crazy. It's a lot higher than the neighboring towns, which also have, good schools.
Yep.
But I guess because Princeton is small, it doesn't really have any land to build on anymore. The towns have passed ordinances to allow for ADUs to be built. So I guess that's an opportunity if you're an investor to look at. You can look at the lot size. Hey, maybe I can put up a small ADU here that I can rent out to help compensate for the taxes, the mortgage. That's very helpful. But what I see is the houses on the lower end, they appreciate so much faster than here. I think if you're over 3 million, you're going to stay on the market for a while.
Yeah.
But the cheapest house, townhouse, that sold for 420, something like that last year. Yesterday, something just closed at 572. Well, same kind of house.
So, it makes a lot of sense, right? You've got the houses that the most amount of people can afford are the ones that are going to get the most competition, and the prices are going to drive up. And in every market, you've got a cap. People aren't going to pay what they can afford, and if 3 million is the price point, or 6 million, or 12 million, whatever it is, it's a lot of money at some point.
But for buyers, I mean, I sympathize with the buyers because usually what happens is that you can't afford a house you love, but you don't love the house you can't afford.
Hey, you know what? That's kind of the nice part about limited inventory.
Yeah.
You know, I love the Henry Ford quote. There's something like this: they can have any color they want as long as it's black. Right? And the Model A, came out in one color, and so it's like, you know, sometimes it's you get what you get, and you know what? Maybe there's a point in the future where the housing market's different and or your financial situation's different, but you know, even the rental markets are outpacing, I think, what a lot of people can afford. I don't know how big the rental market is in Princeton.
Well, in recent years, I think because of the Mount Laurel settlement in New Jersey, there have been quite a number of apartment complexes being built right now. I don't know what they're doing. These apartments are nothing affordable. Like a 2-bedroom could be close to $4,000 a month. That's not affordable.
I mean, right? They're not low-income housing. It's not affordable housing units, right?
Right.
Yeah. Well, and hey, it all comes
just
back to supply and demand.
And move in, and then if your financials improve in the future, you can sell your current residence and upgrade to a bigger one. You know, at least you get something, and you don't have to pay no rent every day for somebody else.
Well, exactly. And how are you going to save for a down payment paying $4,000 a month for a 2-bedroom?
Yeah.
You know, I mean, it's going to be awfully tough.
Yeah.
There's like some California numbers, really.
Yeah. That's why we love clients from New York, from California. They're used to higher prices.
Right. Exactly. There's no sticker shock, right?
Yeah.
So we have in Central PA, Hershey and Derry Township School District is very similar to Princeton in that there's a lot of very good schools in the surrounding areas, but it's the best. And there's, you know, you have the international headquarters for Hershey Foods. You've got Milton Hershey School, which is there, and there's a med center and a whole bunch of things, right, that attract people from all over the country. And during COVID, you had all of these people that relocated from New York and from Philadelphia and things like that. And the price points in Hershey maybe were, you know, 10, 15% higher than the surrounding markets. Well, you had this influx from, you know, New York and Philly, and they're moving from, you know, 600,000-800,000 median home price or $1 million home price to, you know, into Central PA, where a $300,000 home 5 years ago could buy you a heck of a lot of house. Now, you know, we're a little bit more on pace with, you know, maybe some of the larger metro areas, but it's interesting to see that sticker shock locally. It's not the same. You know, you live here for a couple of years. How much did that house sell for? That place is the dump. What the heck are you talking about? You know, but yeah. Well, all right. So, Charlie, if people want to get in touch with you, if they are looking to move or relocate to the Princeton area, or maybe they live there now and they're looking to sell their property, how do they get in touch with you here?
Yeah, they can get in touch with me by probably calling me or texting me is the best, 609-375-5677, or email me. I don't check my email, probably not. I won't be able to until the night, but yeah, I read all emails.
That's awesome. We've got this streaming across the bottom of the video here. Look, reach out to Charlie if you have any questions, or you're really looking for somebody that's an expert in New Jersey and specifically Princeton markets. He can certainly help you find a property or get that place sold. If you are looking for a hard money loan, give me a ring. You can reach out to me online at hardmoneybankers.com or shoot me an email at josh@hardmoneybankers.com. We'll be back here next week. Until then, thanks so much. You guys go out, make some money, and thanks for joining us today. Talk to you soon.
Thank you, Josh.
All right. Thanks, Charlie.
Bye-bye.
Bye-bye.